We have gone back in time to the year 2021. Roaring Kitty has returned, and with it, meme stock mania is back, ladies and gentlemen. We'll be discussing that, the week ahead in the markets, and much more today on Money Never Sleeps. Thanks for joining us today, everybody. Hope you had a great weekend. Before we get going, do us a favor, hit that like button. And if you haven't yet, subscribe to our channel. And remember that nothing we say is financial advice. So please do your own research before making any buys or sells. And Kevin, right now, the only thing people are buying or selling is GameStop. Welcome back. We woke up 3 years ago. It is a beautiful time in the markets.
Yeah, man. This was the time 3 years ago where everybody was making money. Don't think it's the same situation, but I'm very happy to see some panic out there because there's definitely people who did not expect GameStop to pump. Some people that actually did bought a ton of calls Friday right before market close. So you never know what this market's going to throw at you. It's very far from being logical. I don't know if it'll ever be logical once again. But yeah, I mean, we're already even seeing that they're closing the markets. They're pausing people from or keeping people from buying to the upside now. That was something you and I were talking about months ago. It's like they never stop it to the upside. Guess what? They did today. So, like I said, I'm here for the show. This has been a blast so far. It's only been the first day.
For those who don't know what we're referring to, Roaring Kitty of GameStop fame. If you've seen any of the Netflix documentary about it or Dumb Money, the movie, with a main face of the meme stock mania of GameStop absolutely going crazy, of Melvin Capital eventually going out of business due to their short position on GameStop, just out of the blue yesterday. And he put out a tweet, and it was a meme of the guy playing video games. He's sitting back, and then he's leaning forward. No caption, nothing else. And that right there set off a chain reaction. I was listening to a sports podcast before this, and they started talking about it. Like, we are in a weird time. And what it has done is, you want to pull up the chart on GameStop real quick? It's come back down a bit, but still absolutely insane. The gap up on this thing, 76% up on the day. It was significantly higher than that earlier. Absolutely ridiculous.
Yeah, I mean, this is a massive gap up, and we kind of saw it last night, right? I think it was like up 20% right before I went to bed last night, and then at the height of this, it was up 110%. They stopped trading 5 times. They halted it 5 times today to the upside. We were seeing outages across Robinhood, E-Trade, a bunch of other exchanges that were offering GameStop. Very reminiscent of what Robinhood did back in 2021 as well. But looks like they're acting a little bit quicker here. Now, the funny thing is, when I was looking at this and just seeing some of the news on Twitter this morning, is that a lot of people didn't close their short positions on GameStop there because a lot of people still expect GameStop to be a company that's going to go under, right? But once again, Roaring Kitty comes back, also known as deep fucking value, and ruins a start to a lot of people's weeks. And again, the timing is just so wild. And you and I were talking about this before because we got a pretty busy week of important data. We know that Wednesday's OPEX is super important. There's over $5 trillion of options expiring. So I can only imagine that there's a lot of people that were just in the money on this GameStop short that are just absolutely fucking pissed right now, punching the roof of their car on the way home to their wife and kids. They're drinking. They're drinking in their in their driveway. Just I can't believe I got to go inside right now. That's pretty much what I imagine a lot of these short sellers are feeling.
Yeah, that's a rough hit you took right there, but That is the game that you are playing. Speaking of the week ahead, we have quite a bit going on. Last week was kind of boring. There wasn't much economic data, but this week we have some really important numbers coming out. PPI tomorrow, producer price index, and then the consumer price index on Wednesday. Kind of it's flipped around from how it normally is. Normally the CPI comes out the day before PPI. For whatever reason, it's flipped this month. Expectation is that we are going to see the CPI numbers come down month over month and year over year on both the headline and the core side of things. If it doesn't, I mean, I don't know what exactly to say. Like, there's the expectation, right now the market is just hoping. There's just so much hope out there. We also have later tomorrow Jay Powell speaking. He'll be going up. We have a few other Fed governors throughout the week. We'll get some retail sales data. There's still going to be earnings coming out. So what do you think are, the main movers this week, Kevin? Like, we can move past the roaring kitty stuff and how fun that is, but what do you think? And we can talk about Asia too. I know that you're balls deep in Asia. So give me kind of what you're focused on for this week.
It's a great way to be. No, this is the wild part that's going on right now. The roaring kitty stuff actually is pretty important. A lot of people probably don't see this as, we're adding a lot of liquidity to the markets. The other thing I really wanted to talk about was also how CPI, they removed cocoa and coffee beans, right? Or coffee, the equation. It's like,
just continuing to stack the fucking deck. What a bunch of shit.
Yeah, I mean, if it doesn't come down, and I think most people in America drink coffee, right? We're not like those fucking Brits that are like, I want some tea in the morning. No, we're coffee drinkers here. We put some Jack Daniels in our coffee. I don't, but I know Americans definitely do that. And then they go work on an oil rig somewhere off on the Pacific.
My wife doesn't drink coffee, and I find it to be very strange.
I don't drink coffee either, but I love the taste of coffee, like coffee ice cream and shit like that. So it's important in the American culture. It's just funny that they're taking away something that people use every day and has been going up in price nonstop. So if that doesn't come in at expectations or below expectations, then good luck, guys. But yeah, I think OPEX is another one that's going to be a huge mover. And then Asia, we got some really bad news, but no one's talking about it because everyone looks at the Hang Seng, and guess what? It's up at 19K right now, up from that 14K it was quite a bit ago. But we're going to see something really quick. I'm just going to pull this up right here. Finance a lot. We use this stuff a lot, and it's important because he does a pretty good job covering this. But Chinese authorities have kicked off plans to sell $1 trillion of yuan, so about $138 billion of long dated bonds, and that's in USD, as it ramps up spending to stimulate the economy. Okay, why are they stimulating the economy? When we look at the Hang Seng, this thing's at 19K. Well, we're starting to see a lot of these bonds being sold off globally. We saw Japan intervened when it came to the yen, which, just so you guys know, is actually doing exactly what we said on Friday. It's going up higher. It's going to be problematic tonight under open. I think even tomorrow night it's going to be a worse time for Japan. They're going to have to decide whether they're going to intervene or not. Once again, Janet Yellen's like, intervention shouldn't happen all the time. Well, it seems like it's becoming a bit of a habit. It kind of shows you that things aren't working out. But the reason that they're selling off these bonds is because they probably need cash. And we know that China specifically has been buying gold like crazy. And guess what? Gold is near all-time highs, and they were pretty much net buyers. Are we going to start seeing a lot of these countries and these, a lot of these global economies start to be net sellers of gold? The answer is possibly, if this is the reason why they're selling off a lot of these long dated bonds. So I'm very much going to be watching this. We have a couple of bond auctions also this week in a couple of other countries that are going to be very important. So Asia is going to be one that you're not going to hear of until it's too late. Still my assessment. But yeah, I mean, between the yen and a lot of these bonds being sold off, I think we have a pretty good case to say that there is a huge collateral shortage and a huge dollar shortage. And, the DXY right now is coming down, but are we setting up for a rocket to the moon? Possibly. We might see what we saw in GameStop today happen for the dollar, and you might see a lot of these other global currencies pull back. So Asia is very important right now when we talk about the monetary system and how much debt is exposure they have to the US, because anything they do, it's going to come right here, and that's going to go right into the US equities, which I'm going to tie back to roaring kitty. A lot of people think that we're getting back to 2021 with GameStop. Are we though? What's different from 2021 what's different today that's different from 2021? Well, the fact is we don't have the stimulus checks, right? That was one thing that, sure, it's not a huge amount, but a lot of people are like, fuck it, I got a little extra cash, let me throw it into the market, see what happens. And it just kept on going and going and going and going. We know right now we're in a bit of a liquidity crisis. We look globally. The other thing is a lot of people are laid off, and those jobs aren't coming back. Like, obviously with the pandemic, some of those jobs went remote. Maybe they lost their jobs for a period of time, but they came back because they did stimulate the economy. People were able to find other jobs You're not seeing that here. So what I'm thinking you're seeing here with the GME is 100% a bit of a gamble. People that saw that, hey, he was right last time, maybe he's right this time. Like I said, timing is very impeccable. I don't buy it one bit. I'm happy he's back, but the reason that this is happening, is very, very suspicious around this OPEX. $5 trillion worth of contracts that are expiring. We saw today, going back over here, the VIX popped over 8% today. Why is that important? Well, it's kind of important because that means that we kind of found the bottom right here at this 1258. Now we could fill this gap down here from 1275 to 1324, but what if we don't? What if we make a little round trip up north from here? We're going, if we get some news tomorrow or bad news this week and volatility starts to kick in on the S&P, you could be back in this triangle. And guess what? We're very close to breaking out of this or deciding whether this was true or false, that we're going to break out like we have the past few times, back in 2020, 2018, back here in 2015. Like, we're getting pretty close. And I know a lot of people say you can't do TA on the VIX, but I'm like, but there's a lot of things that are kind of lining up together that we have to be cautious of. So that's why I'm very not optimistic, but like pessimistic of things that we're seeing right now with GME. We do know that who's on the other side of that trade. It's market makers. It's, the Robin Hoods. It's the Ken Griffin Citadels that are on the opposite side of the GME trade. They're also on the other side of the short volatility trade because they have to make a market, and if no one's there to buy the opposite of the short volatility trade, they will. So now they're sitting on pretty much a ton of options that are long VIX, and they're getting hit on this on the meme stock mania right before this OPEX. You have to wonder if the easiest thing to do is to offload some of those assets and just bring everything down and just be on the right side and short this entire market. So that's kind of this skepticism I do have around it. I mean, it's fun to see everyone like have fun, make some money, but I just don't think that the situation from 2021 is where we are right now. I think if anything, this is a way more dangerous scenario because it's not just one country that's in a lot of pain. It's about 183 countries that are in a lot of pain, and you're not guaranteed to secure some of those gains if all of them decide to dump their debt at the same time.
And it's so crazy. I don't want to go too far back to this, but Roaring Kitty is on the front page of Bloomberg, for Christ's sake. That's like, that's how you know it's just a weird, they're looking for eyeballs, right? And this is going to bring in eyeballs for sure. If we look kind of,
are we trapping them?
Are we trapping who?
Everyone. The last bit of liquidity that's out there, right? It's like he's on the front of Bloomberg and Bloomberg's kind of embracing it. I don't know. That's very sketchy to me.
I mean, they're reporting on the news, and right now the biggest mover in the market is GameStop, and the reason it's moving is this guy. If we kind of look around the market outside of GameStop, it's pretty boring on the whole. Preparation H does feel good on the whole. Anyway, we see NASDAQ is pretty flat. Same can be said for the S&P and the Dow. Once again, all of the focus is going to be on what is coming out in these inflation reports over the next 48 hours. Apple having a decent day on the way up. Tesla also. Netflix doing okay. I'm really interested to see what happens with Netflix and their move into live sports and how that is going to impact the stock price. We know that there is discussion with the NFL and the NBA with Netflix. How is that going to, what are they going to be offering there? Is there an opportunity to buy that stock? Maybe not today, in the near future, though, if we see a pullback. I think we can talk about this on another episode if we want to, but the entertainment side of thing is one part of the economy that I'm not going to say is recession proof or, going to completely avoid the effects of a market correction, but people are always going to want entertainment, and that is becoming more and more of a stable sector. And who is going to capitalize that in the years ahead, I think, is an interesting discussion for a different day, perhaps.
Yeah, I mean, people love cheap entertainment, and it is fairly cheap unless you have like all of the subscriptions, right? Netflix also is probably going to do pretty well once that WWE merger goes through too, where they have Monday Night Raw, and potentially they might be the home of WWE if things work out for them, right? So it's going to be really interesting to see that. I do want to pull up this in the S&P too, and maybe we kind of ties in with some of that recession-proof ideas. But we're in another similar triangle than we were, since November. And this one broke down, and it's not perfectly broken down. I expect it to go at least down to like 4,000 on the S&P if it's going to break from it, right? But I'm looking at this right here, and we're getting this GME shit right at the top of this channel. Looks like it's going to break either up or down, and volume once again for the 9th straight day is on the down. It's on the decline. This is a big 2 days ahead of us. We got Powell speaking, we have the PPI, and we have CPI. I'm not surprised that the markets are kind of flat today. The question is, what happens if we start closing out of this? And we look at crypto in a second because that's kind of what we're doing. We're closing out of it in some aspects because dominance is starting to climb. The other thing too is this is climbing up. This is obviously the yen. Keep an eye on this. It might not be too far off in the future before we get to 160 again. Could get a very similar candle that we got back on the 26th of April. That could just be shoot up. And if it gets to that point, they're going to have to unload some of those equities, mainly the ETFs and mainly, US debt. But this thing is funny. Apple. You see why Apple's going up today, right? Because of the merger with OpenAI. So,
yeah, I saw that.
Absolutely. News. Yeah. So again, people speculating. It seems like everyone just loves speculating when it comes to AI. Another one that we could absolutely look at, because it's an absolute joke and their earnings were terrible last time around, was SoftBank. Obviously, SoftBank, I'm not going to look at their stock itself, but let's look at ARM. They announced that they are going to be producing new chips, and they did that before they announced their earnings. Obviously, SoftBank announced that they're going to do that announced that before they had released their earnings, which they also delayed their earnings because they were so bad. We're working with some real winners in this market right now. I'm just letting you guys know that that AI euphoria. I sent you and House that thing last night too about how Taiwan's production and output of semiconductors dropped, I think, 18.8% in the month of April. Is there demand? I don't know. Maybe it takes a month or two before we start to see that, but these companies aren't necessarily doing so hot. I'm very interested to see if NVIDIA has, they might say something about forward guidance, right? Obviously, forward guidance might not be hot, but they could still have a really good quarter, or it could be the opposite. They could have a bad quarter and say, but we still expect things to pick up. So looking at this across all of, the equity market, when we go back to the S&P and other stuff like that, is that my phone? Fucking scam likely bastards. How can I short them? But this is what I'm getting at is we're looking at a pretty close thing to a top, I think, in a lot of these markets. Now, maybe we have a little bit to push up a little bit higher, trap everyone. GME is the reason why. But if it's not, we could be sitting very soon, very shortly, on a pretty big fall in all the major indexes. And obviously, with that, I would expect some of the ones we just talked about to be some of the big leaders to the downside. Namely, Apple obviously has a big gap to fill. Tesla is a company that's probably not going to make a lot of money if people are losing their jobs. NVIDIA is the one that I'm questioning, has room to push to the upside before earnings. That's going to be one I'm going to be watching. But then we're just starting to see layoffs across the board too. Indeed announced that they're laying off 10% of their workforce. The company that helps you find a job is laying off 10%, I think 1,200 people or so. So we're in a very fucking weird market. I say that from the bottom of my heart with complete honesty that this is I don't know. This is a very weird place right now. I'm so skeptical and suspicious that I keep coming back to that because nothing makes any fucking sense. And I kind of like that because it means that something's gonna break or someone's gonna lose big or win big. I don't know who it's gonna be, but I'm pretty sure it won't be the majority of people trading in this market right now.
All right, let's talk crypto for a little bit before we wrap up.
Ooh, did I lose you? I did.
Hello?
You know what? My phone call fucked me.
Oh, that's not great. Let me pop out and then come back in.
Nope. I got you.
You're good? Okay.
Beautiful. Scam likely screwed me.
Those scamming sons of bitches. All right, let's look at crypto. The majors are all green on the day. Bitcoin up about 2.5%, but not surprisingly, it's the meme coins that are leading the charge as a result of all the GME excitement. We see, things like Pepe and Mog, and you have the GME token on Solana, I believe, that are all, that's going to be the hot stuff right now. Dogecoin is having a decent day. let's talk about, I see you got Bitcoin dominance pulled up. Let's start with that. And if we want to touch on any meme coins, we can.
Sure. I'm not the meme coin expert. I can tell you that they're hitting all-time highs, but we'll see how long it lasts. But the Bitcoin dominance, the reason I want to bring it up is because it's actually increasing. It found some pretty good support on the 50 moving average here. It had a really good bounce, and we're sitting at 55.33%. That's still big. I remember when we were saying that it was going to go from 52 to 57. It was down to 52 here on the 200 EMA back in January, and then by the time we get to April, we hit 57%. There's a good chance, there's an argument to be made that we go back to that 57% and start climbing above it. Sure, it's overbought on the daily, but for some reason, it seems like Bitcoin's holding up a little bit stronger than some of these alts. At least it was over the weekend, right? Let's look at Matic. Matic is one where, funny enough, it broke out of this parallel channel. And it looks like it was starting to come to the downside. Obviously, volume has been extremely low. Let's look at there's some other ones. A lot of these are just kind of sideways trading. Oh, I got to play it. I'm sorry, guys. I got to play it for Cardano because that 100% is we're starting to see the alts lose. That's what I'm pretty much saying, right? And it doesn't look like it because we're not seeing these massive red candles that we saw back here in, April when we had that move down from like 58 cents to, what was that, 38 cents. We had a bit of a flash crash there. But they're losing. They're moving sideways. If you're in a crypto market and your coins are moving sideways and the trend before that was to the downside, it's a continuation pattern. It's going to continue moving to the downside. Now, don't get me wrong. You could have these meme coins that shoot up like crazy. Those are wild cards, oddballs. But if we look across the board, the reason why this is happening, why it's not moving up, is because Bitcoin dominance is staying strong and relatively above the 50 moving average, and it's continuing to push up. I mean, you can't find, Cardano below the 50 and the 200, Matic below the 50 and the 200, AVAX below the 50 and the 200, Link. Oh, come on, don't make me look like an idiot. There we go. Below the 50 and the 200, right? It's across the board. It's KuCoin. Well, that's exchange tokens. Fuck those. And then once again, we have the probably the strongest alt out of them all, Solana, outside of obviously ETH. Just kissing the rim of the 50 moving average. It's probably going to come down and test the 200. And if it doesn't hold that, then we're probably going to see Bitcoin dominance rise once again, get closer to that. And why is that important? Because if Bitcoin isn't able to break the 50 moving average itself, I mean, look at this. How many times are we going to fucking hit this thing and just keep hitting it and not be able to break above it? Well, then you're going to come down lower. But then the other thing is we have support right here around 60,000. So we're kind of getting to a point where it's going to go one way or the other. I'm open to all possibilities. Maybe something happens and Bitcoin goes up to 67.5K. Maybe it goes a little bit higher. 75K. I don't think it's likely, but it's possible. I will admit that. I think that we're going to come and break the 60,000. Once we break the 60,000, I think we're coming down to this 200, and that would just absolutely wipe out a lot of gains for alts. So it's something that we have to keep in mind. In the total market cap, below the 50 moving average, total 2, below the 50, total 3. Total 3 is funny. That thing should not be up there. It should actually be probably down here. We'll see that soon enough. But that's just the performance I'm seeing across crypto. If you want to look at some of the alts, I don't know what their tickers are. Pepe USD. I don't know.
There you go.
One of those things. Yeah, all-time highs today, right? Like I said, they're illogical. They're illogical. You can make a lot of fucking money in them. But timing this, timing the bottoms for some of these, like technical trades, good luck. I don't have the balls to do that or the wherewithal to sit through it and kind of say, okay, this is the bottom of this shit coin. It's like, I could have thought the bottom was right here, but no, it was actually even down here. So we're getting to that point where it's like the meme stocks, the meme coins are rallying. It's very similar to what we saw in 2021. Honestly, it's actually kind of similar to what happened in 2020 as well. January, February of 2020, everything was rallying. Nothing bad could happen, and something bad happened. And obviously the market dropped 37%. Some things even closer to like 60 to 70%. So it's, buyer beware, be careful out there. That's kind of all I could say about some of these memes. I'm not trying to be.
Do not please, for the love of God, this is financial advice. Do not overextend yourself into volatile assets, please. I don't know. Like that, I feel like that's a pretty reasonable thing. That a lot of people will like this. This is a hype cycle, and there's gonna be a lot of FOMO right now, and people are gonna get caught in it. And unfortunately, people are gonna overinvest and hope to make a quick buck and hope to turn their rent payment into 3 months of rent payment, and they're gonna lose it all. So please don't be one of those cautionary tales.
Exactly. And another reason why I don't think people have any idea what you're talking about, and especially some of these influencers who are like, I made this much money on GameStop this morning. Well, good for you if you did. But also, average credit card debt in the U.S. is now soaring past $6,500. That's $6,500 that could have gone into fucking Bowden or whatever these bullshit meme coins are. It's like people don't have this cash on hand. So if retail is the reason why it won in the first place the last time around, I don't think you're gonna have as strong of a team this season. That's all I'm saying. It's you're playing with maybe what was it? I guess I could make the Sandlot reference when they were playing with like 8 guys, but they're playing with like 3 guys. It's more like the bench warmers instead of the Sandlot, right? And then you gotta have your brother who's afraid of the sun come out and take a hit, and then hopefully get home on that pitch.
Absolutely ridiculous reference.
But
right
you
there.
love that movie because it's amazing, and that's exactly what's going on here.
Such a stupid movie. All right. Anything else before we wrap it up? I think that about covers it. We'll be back throughout the week to go over the latest data. A lot to talk about. I think, maybe we're going to have, maybe the markets are going to be fun this summer. That would be a change of pace because normally they're pretty boring.
I just want the markets to do something logical, but I don't get what I want often. So I'll just leave it with that. Just keep your eyes peeled and don't get caught up in
for
euphoria.
Logic in an illogical world is a fool's errand.
This might be the most illogical markets have ever been in the history of time. And people are like, well, you weren't there. Shut up. It is. Fucking we have meme coins now. And inflation is a problem that we create sometimes.
Embrace the chaos. That's all we can
do.
I
love chaos. That's all I want.
Me too. Me too. All right. That is going to do it for today's show. Thank you for anyone who joined us, Mr. House. Come on, man. Those are amateur numbers. You got to pump that up. Okay. You gotta pump those things up, man. Maybe it's just because I got a kid now and I'm drinking 18 cups of coffee a day, but the inflation is in fact very real. We've been talking about
rookie
this.
Numbers.
They really are. They really.
What movie is that from? Wolf of Wall Street?
Mm-hmm.
Or it's Matthew McConaughey, right?
Yeah, it was McConaughey's part.
Yeah.
Man, so just random because we're just kind of like shooting the shit here. The biggest liquor store in my area is going out of business, which is like really like they're like 40% off, like going out of business sale. And I stopped drinking. I'm wondering if that's why they're going. I mean, I think back, I'm like, how much was I really drinking if they're not going out of business? And that's it's all because of me. But no, it's weird seeing. And we talked about the wine last week. Like, I don't know, man. Things are starting to tighten up for a lot of people financially. So definitely interesting times. And if you're in profit in some of these things, don't be afraid to take a little bit off the top. Okay. All right. That's going to do it. Enough rambling on my end for today. Kevin had all these good points, and I just kind of go off the rails. It's fine. It's how we do it here on Money Never Sleeps. Thank you for joining us today. If you haven't, subscribe, comment. We're out. We'll see you next time. Love you guys.
Take care, everyone.